years from now, it'll be $250,000. Now, what is possible, I won't say likely, but it's certainly possible that like in 2017 and like in 2013, the price goes much above value. Yeah, look, it's interesting is I say that the idea that any of us know what the price of any asset is going to be in the very short term is really kind of crazy, in the sense that one of the challenges we have for all assets is the value of something is relatively easy to determine. There are cash flow models for stocks and bonds, and there are dividend discount models, and there are other models for networks, and there's Metcalfe's law and all the things that people have applied to come up with what the value of the asset or the value of a network will be. The hard part is the price, because the price, as I stole a line from John Burbank, the famous hedge fund manager, price is a liar. And price is simply what two people decide to exchange a small amount of any asset for. It has nothing to do with the value. People exchange at low prices when it's below the fair value. People exchange at high prices, well above fair value. And it's like a pendulum, right? It spends very little time in dead center. It's usually too far to the left or too far to the right. Same thing true with Bitcoin's price. It's rarely on the value. And so my forecast is really about the value of the network. It basically uses Metcalfe's law to draw a parabola, and it's a nonlinear logarithmic regression, which most of us are really bad at. Math is hard. And long story short, it said it'd be $10,000 in value in November of 2017. Pretty good call. We hit it almost 6 days to the day. But then the price went all the way to 20,000 and then crashed all the way to 3,000. So the price was very different than the value. This same model says the value by July of this year will be around $100,000. And out 5 years from now, it'll be $250,000. Now, what is possible, I won't say likely, but it's certainly possible that like in 2017 and like in 2013, the price goes much above value in the fall of this year, because individuals come in. And what happens is all markets migrate ownership. The original owners of any asset are investors, right? They buy it because it's below its fair value and they want to hold it for the long term. And then as things start to move, the traders come in, and the traders are looking for things that are moving in one direction or another and have a shorter duration of hold. The problem is when the speculators come in. When the speculators come in, they only buy what's moving. Look, if you bought something because the price was moving up and the price starts going down, you will sell it, right? Because you have no conviction, you have no courage, you did no work. It doesn't make you a bad person. It just acknowledge it for what it is. It's speculation or gambling. If you're an investor and the price of an asset falls to a level that you believe is below the fair value, right, not only will you not sell, you'll buy more. And if Bitcoin truly is, and I will argue it is, digital gold,
right?
It has all the attributes of gold as a store of value with three superior elements. It's more portable, right? All the gold in the world fits into Olympic-sized swimming pools. All the Bitcoin in the world fits right here. Now, I don't have all the Bitcoin in the world, so don't SIM swap me, but it could all fit there. So it's more portable. It's also more divisible. I don't know if you've ever seen the movie Knight's Tale, one of my favorites.
Yes.
There's a scene where Heath Ledger, Sir William wins the sword, and he gets this calf made of gold. And his, squire is in trouble for gambling, and he has to bang the calf in half to break it off and says, go do what you do with this. That's a really inexact way to divide that hunk of gold. Whereas I can divide a Bitcoin into, 2.1 quadrillion, which is why my hashtag on Twitter is hashtag 2.1 quadrillion after my name, 2.1 quadrillion Satoshis. So 100 million Satoshis per Bitcoin. So we can put that division of value to a very fine point. And then third, it's less costly to secure, right? Putting your gold bars in a Swiss vault pretty expensive, pretty bulky. Securing your Bitcoin in a good custodian or cold storage is pretty easy. Bitcoin's been an asset for 13 years, right?
Mm-hmm.
Every year, except for one, the low for the year is higher. So it's actually been a perfect store of value, meaning it has held its value relative to the devaluing dollar. Because part of the reason Bitcoin price is rising is not because Bitcoin's getting better. It's like I ask people all the time, what's the lowest price you remember for a gallon of gas? And you're too young but when I was growing up, it was 31 cents, okay? 31 cents for a gallon of gas. When I went to visit my daughter in California before the lockdown, I paid $4.31. Same gallon of gas, does the exact same thing, didn't get better over that, 50 years, but it costs more because the value of the currency is less. So part of Bitcoin's rise or gold's rise is not that they're getting better, it's that the dollar's getting worse. And so this argument about volatility is silly because you're looking at the wrong time horizon. If we look at a day or a week or a month, lots of volatility. But the fact of the matter is, gold in 2011 was $1,900. By 2015, it was $1,100. Lost 40% of its value. Did it cease being a store of value? No. It just meant the price maybe was being manipulated, some might say, by the big banks or whoever, or supply and demand were out of whack, or too much supply came on, whatever it was. That was very volatile. In fact, the Bitcoin does it in a week. Yes, it's more volatile, but that's because volatility in price is an indication of the average marginal buyer or seller not understanding value. Back to our original point.
Right.
The average person setting the price, remember, the price is just what the last two people decide to buy or sell.
Right.
That person has done no work, has no knowledge, and has no idea what the value is. Then they will sell at any price just to get out. And if you look at the people who were buying in the last month versus the people who were selling, it was institutional buying and long-term hodlers who were accumulating. And there's something in financial circles parlance called smart money. And smart money is the big institutional buyers. They trade at the end of the day in the traditional markets between 3:30 and 4 o'clock. And the retail money, or the dumb money, okay, trades from 9:30 to 10, right? Markets open, that, dumb money trades in the morning, and the smart money comes in after the market's settled down, and they either do what's called accumulation, meaning they're buying, or distribution, meaning they're selling. And who are they distributing to? The dumb money the next morning who's buying on the open. And so the same thing's happening here in crypto, is the people who came in chasing the price, as soon as the price goes down a little bit, as soon as some of the leverage speculators are liquidated, they then panic sell. And who's buying?
We've seen Bitcoin chip away at gold's market cap, and JP Morgan just put out a note saying that there's been a reversal of this, but most people have a funny feeling that it will continue to chip away at gold. If this is the case, my question to you is basically, can they both just coexist? Do you not see?
Absolutely coexist, because they play different roles. Look, no one can say with certainty that we're not going to have a Mad Max event someday, right? Where the power grid's off and people are and that's when physical gold, right? Lots of stories of wars and conflicts where your earrings or your candlesticks or your gold coins got you through. So there is a role for physical gold, not paper gold and GLD, not paper futures contracts, but real physical gold, bars, coins, things. That has been true for 5,000 years. It'll be true for 5,000 more. Right? I've never told everyone to take all your fiat and convert it to Bitcoin or Ethereum or any other cryptocurrency. I think you should take a portion of your currencies, right? Convert them to hard money, gold, silver, crypto, opt out for a portion to protect your wealth against what I call the fiat fiasco. The central governments around the world are going to print money. They have no choice. When you get too far in debt, which is how every empire in the history of mankind has failed, you must either pay it back, default on it, restructure it, or inflate it away. Those are your only four options. We can't pay it back. There's not enough taxes. If you taxed everybody 100%, we couldn't pay back the debt. So they can't do that. To restructure something, you have to have somebody who would take the deal. We don't have that. You could default on it, but then you get kicked out of office. So no politician is going to vote for that. So your only choice is to devalue. So every Western nation, which is highly indebted, Japan, Europe, US, etc., will devalue their currency.
Right.
Exception of Japan, of China, which is appreciating their currency because they're turning into a consumer economy. They will all devalue their currency, which means gold, silver, precious metals, collectibles, items that are scarce. And Bitcoin is the scarcest asset in the world today, based on stock to flow. That will appreciate in value because the currencies are devaluing. So we should all have both in our portfolio. Do I believe that there are advantages to crypto over physical gold? Yeah. Am I going to ditch all my physical gold? No way. Cryptocurrencies, decentralized currencies, have an advantage in that they allow us to take a portion of our wealth and get out of the fiat fiasco.